Hi everybody and welcome to this week's ICE commentary on the US dollar index. Firstly, I'd like to just wish all of our American listeners a happy Martin Luther King Day, and just to remind everybody else, just in case you weren't aware, that it is a public holiday in America on Monday, and what we have is an early close. So we have some electronic trading, then we have an early close at 1 p.m. Eastern Time on Monday, with the markets opening up again on Tuesday. So we've got short trading there for the dollar index, but still we'll be having a look at the charts here today, just looking at that bigger picture view and looking at where things might be trading this week. So firstly, let's just have a look at where I saw things last week as well and how that's panned out. Now, last week we were back up here breaking above this previous daily high, and I thought it looked quite bullish if we could hold that. What I was also looking for is that we broke up through this monthly green candles. That's a couple of months old now. That's November, then December, we're now into January. What I was looking for in January, which was very close to happening last week as I spoke, I was looking for a push up through that level. I thought that would be a very bullish sign of a push back up towards 90. Now, even though I was bullish there, it actually hasn't followed through at all. Very soon after speaking, we had these very small down days, then we had some big down days there for the US dollar back towards the bottom of this range. In fact, what's happening if we just maximize the monthly chart so that we can see this range, we're kind of at the midpoint of the range, and we've actually ever so slightly broken down through the low of that candle as compared to breaking up through the high, which is what I really wanted to see. So now we're in a range. We'll come and look at that on a daily chart in a moment, but the question of course is, are we going to come back down towards the bottom of this range, or are we going to come up towards the top? At the moment we're actually stuck in more of a daily range than that bigger monthly range we're seeing. And that is, we're stuck down here between about 79 and up here around about kind of 81 to 82. And we've been within that range now for the whole month of December and all of January and even a little bit of November. So we're talking a good couple of months we've been within that range. We've got to really be looking now for breaks out of that in either direction. And I mean a decent break, not just a little nudge through like we had here. We broke down by a couple of ticks virtually there, broke down below 79 just on Friday last week, but we didn't hold it and we've rejected that level. So if we really start to assess the candlesticks, what we'd see here is, well, this candle came down to support previous resistance, also now most recently support. We came down, we tried to break below, we got a bullish candle here, we rejected that point, and we're ranging. So a range-bound strategy might say we could trade within that range until we see a break. Of course, a continuation strategy would be looking for a break down and a move back down towards these lows, or a break up and a move back up towards the highs. So the question is, which way is it most likely to go? And it's a much more difficult call to make in a ranging market than it is in a trending market. All I can really do here is look at the weekly chart and say there is some weekly downward momentum, and just to draw some Fibonacci lines in here and say, right, from the most recent high down to the most recent low, where have we pulled back? And we're kind of in that sweet spot zone, around about 50 to 62% is really where the decisions tend to get made. We've been hovering around that for a long time. We've gone a bit beyond it, we've gone a bit below it, but we're stuck within that range. This really clarifies for me that, which is the exact daily range we could see, these two levels here. I either want to see a break down, significantly down below here around 79, or a good break up above 82. Either one of those is going to be a good sign that actually, in the case of a break up, this is not downward weekly momentum at all, and in fact we're bouncing off monthly lows, or in the case of a breakdown, that actually we are coming back down towards these lows again and we're going to retest those lows because the weekly momentum is remaining down. So in the short term, what I'll be looking at is I'll be looking to consider trading within that range in the short term, but then be looking for any major move out of that range in either direction. Just to have one little heads up and to have a look at one major product, the one major spot currency, and have a look at dollar Swiss. This is in fact looking very, very bearish. What I've done here is I've drawn in a Fibonacci line, and I've gone from this most recent high down to most recent low. You'll see that we've pulled back 61.8% into this big number of 9,800. We've pulled back up into that level. We've got very bearish candles, and if now we can break down through here, it's going to be looking very bearish to the downside. And same thing here on the weekly chart. What you'll see is we've pulled back up. See how when we've moved down, pulled back into the sell zone, moved down, pulled back into the sell zone, this moving average sell zone based on the 10 and 20 period moving average. What we've got here is a small red candle. If price can break down through that, that's a very bearish indication, which I look for often. So dollar Swiss there is looking very bearish if it breaks down. It hasn't broken down yet, but if it does trigger, if it triggers down through that last week's low, it's going to be a very bearish sign for dollar Swiss, therefore indirectly a bearish sign for the dollar index as well, which is very closely correlated to dollar Swiss. So just a little bit of a heads up there is what could happen if dollar Swiss breaks down and starts to lead the US dollar index down towards that level as well. Of course, it could be the other way around. It could be the US dollar index moving it downwards. I'm not too concerned about which one is moving which, but I like to be looking at both and to be looking at which direction does one look likely to go, which direction does the other. And really, to sum things up for me, if I put it down to probability, I would say looking purely at the dollar index chart, it's likely to continue ranging until we see a break. And I'm not seeing signs of any major break in either direction. However, by going and looking at dollar Swiss, it looks more likely to be moving down, which therefore perhaps also leans the dollar index slightly towards the downside as well. Happy trading, everybody. Have a wonderful week. Enjoy your holiday, those of you in America, and I look forward to speaking to you next week.